Will also be in your portfolio. Avinnash, we come back to you. You talked about FIIs and what they're really looking for, but what about domestic investment? Do you think that has picked up, or what really needs to be done for that to pick up at a much greater pace? Because remember, when we're talking about shifting from a consumption-driven growth to an investment-driven growth, we need domestic investment also to play a part in it.
No, exactly. I think the investment cycle in the last 2 to 3 quarters have slowed down considerably, and clearly I think corporates are still going slow on corporate capex on the ground. I think if you look at infrastructure companies or capital good companies, even the real estate companies, I think the order book incremental growth has not been to the expectations of the industry. I think even today the bigger problem facing the industry is that despite a 75 basis point cut, I think the transmission effect by the banks to both industrial as well as retail customers has not been that kind of sharp. So I think interest costs need to come down significantly. More importantly, as I was mentioning, the core demand is yet to pick up. I think we have seen weak demand in Q4. So I think it probably would take another 2 quarters before we could see some improvement on the macros, and maybe after that corporate capex would pick up, and then probably the investment cycle should start moving up in a better trajectory.
But what sectors do you think are good for investment? Looking at the pharma, the metal space, do you see any picks there?
I think I would prefer to avoid the metal companies. I think clearly in terms of sectors which could do well, I would be more positive on sectors like capital goods or maybe even the road construction companies, where I would believe that there's a lot of incremental order book expected to be opened up by the government, and more importantly, with the rate cut likely now beyond December, I think order book inflow is going to be moderately slow. So I think capital goods companies could possibly benefit. Hopefully, if the IIP numbers which have come in the previous month, the IIP is maintained, and more importantly, GDP growth numbers start picking up. So I would say capital goods are definitely better than metal companies, where I would say that at least for the next 2 quarters, metal companies could face a lot of pressure on their earnings.
What about FMCG? Would you think with a good monsoon, when we talk about incomes going up, we're going to see movement in the FMCG space as well?
Yeah, I think FMCG is also a place where selectively you could see a lot of driven stocks, especially something like a Britannia or maybe a Dabar, or typically even a Hindustan, Uniliver. I would prefer to avoid ITC, because ITC has definitely now faced a problem of volume growth for successive 2 to 3 quarters, and government regulation has also been strict. So I would say that it's going to be a pick and choose, but clearly the large caps, Hindustan, Unilever, Dabar and Britannia could be good choices.
तो एफएमसीजी को लेकर एक आम राय बनती हुई, वहीं कल अगर मेटल्स की बात की जाए प्रियंका, तो उन्होंने आउट परफॉर्म किया था, लेकिन अविनाश का मानना है कि फिलहाल मेटल स्पेस से थोड़ी दूरी बनाए रखें।